Good morning, everyone, and welcome to the PivotBoss pre-market video for January 28th, 2019. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Here's a quick look at the ES in the daily time frame here. What you'll notice is that the uptrend remains clearly intact. Nothing has really changed during this uptrend. We had one down day here several days back, but eventually after price pushed below the 8-period average, we've seen a continuation higher back toward recent highs, not quite through them, but we see a continued overall uptrending structure here, and nothing really changes that just yet. Price continues to hold above the 2600 level to 2620 zone, which is a very good zone, and that's when it dipped down here and was bought. And what I mentioned before is if price can continue to hold above 2600, you likely see a continuation toward 2800 with a high odds shot at getting 2700 here by weekend. So we could be looking at continued overall strength here toward that 2700 and 2800 targets here heading into February's trading. Now, one thing here, we do have a higher value relationship developing heading into the beginning of next month, which is this Friday. I would think that any strength here into the end of the month would suggest an early pullback for February, followed by perhaps late month strength that would carry us higher. So that would be the path here heading into next month's trading. Alright, if we take a look here at the NQ, you'll notice right here price continues to hold again above that 64.79 key level. Really 6,500 evens, and continues to push above here, continues to hold above the 8-period moving average, and again, overall strength is likely to be seen here until price continues to the opposite edge of the range, and that's right here at 71.39. That's the top of the range here. That's the November FOMC key level as well. That level is a naked level since it really had never really been hit after the initial run. It got very close here, and now it's coming back again. So overall, uptrending behavior still intact until proven otherwise, and overall continued strength should be seen as long as price can continue to hold the 6,500 level, especially in the near term. Let's take a look now at crude oil. Here's crude. What you'll notice with crude again, the ES, crude, and the NQ all look very, very similar. They all look similar since the Christmas Eve lows here were taken out, and then you've seen a continued uptrend. We're seeing kind of the pullback hold last week, but mostly sideways. All of that is very, very highly correlated price action. So right now those three are very correlated, and again, I would expect them to continue to be correlated. They're like 68% correlated ES to CL and 67% NQ to CL at this time, and rising, and so that could continue to climb here. And so I would say that all three of those look very similar in structure here. With this one, any failure to get back below 52s here would suggest more strength to the upside to see if those 55s are tested. We did have a pretty strong rejection here. We have seen weakness here off the level that we talked about before. And again, bears are still defending that area. We talked about the 53.40 zone. Price has kind of gotten above there, but rejecting a little bit, getting as high as 53.80, 54 even. So again, bears are trying to keep this offer right here, but if they don't succeed, the squeeze will likely ensue, and we could see more strength again, like the ES and the NQ. All right, let's take a look lastly at gold futures here. You'll see gold had the move that we talked about. This is what we talked about here a week or so ago, where I mentioned that price is too coiled to the apex of this range. It's gotten so narrow that there is no clear facilitation of trade. So you're going to have to see price either take out the high and drop back down, or take out the low and shoot back up in order to widen the trading range. And that's exactly what happened in this scenario here when price took out the low recently. Let me make this a little bigger here. You'll see right here that low was taken out here. It tried to hold it day 2, took it out again day 3, and on day 4 that's when you got the big squeeze up. and it took out the recent highs. And now here we are again near the highs, but not really. You know, we're in an uptrending market, so you have to be careful selling this, but we haven't really gone anywhere during this time. It's been mostly sideways with one big up day, one kind of big down day to kind of push the range. You know, if there's any failure to hold above 1300 here, then you likely see a rotation right back to 1287.60 as this thing continues to chop in this range. Now the range spans from here to here, which is 1275.30 to 1303.70. And again, if price cannot establish acceptance above that new high, I would say we pull back to 1289.5, which is the midpoint, and the 1287.60, which is CVPOC. So that's what we're looking at right here. Likely a snapback reaction toward the zone here, as price now trades within this trading range here, heading into next month's trading with an upward bias. Because again, as long as price continues to hold above the 1250 to 1255 zone, I think this thing is poised to see much more strength to that 1360 zone ahead. So up here where we have all that resistance in the top end of this range, as long as price remains above this level here, I think we have a great shot to get there in the next couple of months. Alright, that is it for now. We'll see how this plays out heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room.